Hello, everybody. Welcome in. This is an interview with Simon Dixon about the Celsius recovery plan. We're going to go through a lot of parameters here that everybody that has any type of exposure kind of needs to know. So, Simon, how are you today, sir?
Have been better, but yeah, duty calls, it feels.
Exactly. Sorry about the late hour. It's, I think, 6 o'clock your time in the United Kingdom. And again, hope I'm not keeping you for dinner. We'll try to keep this as quick as possible. As usual, we've got a lot of ground to cover. And first of all, get this stuff out of the way. Very sorry for your loss. I lost my father myself 22 years ago. I hope you're doing okay, but having this type of distraction as well probably isn't altogether a bad thing. Second of all, big thank you to Plan C for connecting the dots between us. And third, thank you for all you do. Our plan is to go through a quick, rapid fire structure to give people all the information they need. Ask some questions as well that probably already haven't been answered by you, considering you've been on an extensive road tour over the last 8 or 9 days. But we'll talk about trust, the whole, recovery options, other potential alternatives, maybe a little bit about liquidation mechanics and how the numbers kind of add up. Maybe touch on CFI, is it dead forever? And then the plan of action, what Celsians can do now to protect themselves. And as well, the link to Simon's Twitter is below, as well as to his website, banktothefuture.co/Celsius. Please check that out as well. Ton of good information there. So first of all, let's just jump in and not waste any more time. Let's talk about the old Bitcoin mantra. You're an OG. You've been there since the beginning of time. The old words that resonate with me is trust but verify. The question I have for you is, how do we trust anybody anymore in this day and age? Because you and I have both, you could argue, been betrayed.
Yeah, so I've been involved in this industry since 2011. Before I was involved in the Bitcoin community, I was part of the monetary reform community for over a decade. I left investment banking in 2006 because I wanted to work on some of the scams and leverage and implosions that I saw in banking. That led me to writing the first published book in the world to include Bitcoin, Bank to the Future, Protect Your Future Before Governments Go Bust. And co-founding banktothefuture.com, where we tried to create a bank where you could own your own money, spend your own money, and not have it leveraged when it was on deposits. It turns out that was impossible. So after discovering Bitcoin in 2011, I made my first investment in Bitcoin at $3 and started investing in many of the companies in the industry. So that's my background. I'm a shareholder in Coinbase, Kraken, Bitstamp, Bitfinex, Celsius, and over 100 others, household names, blockchain.com, Circle, Ripple Labs, the company. And I've been supporting the industry ever since. Now, the interesting thing about that, because through banktothefuture.com, we've syndicated 150,000 investors that have received thousands of Bitcoin and tens of thousands of Ethereum over the years. We have a very high net worth investor community. I've built a trust over the last decade in an environment where I'm managing multiple conflicting interests. So, we have multiple companies that have all sorts of crypto internal politics, whether they both operate the largest stable coins like Bitfinex and Circle. Or they operate different platforms, exchanges like Kraken, Bitfinex, Coinbase, Bitstamp, and various others. And I've found myself in a position where I have to always have what we call in investment banking a Chinese wall. And sometimes that creates very complex situations for myself. And that really is where we are with the Celsius situation right now. So I'm hoping we're going to go through a bit of timeline in that.
Absolutely.
But the trust, to the answer the original question, I got into this industry because Bitcoin created a way where we didn't need to trust the financial system. And then lots and lots of companies build on top of that. And so I have found that people confuse the different mantras. From my perspective, Bitcoin is the greatest thing that's that's been invented since the internet. It represents freedom. It represents hope. It represents everything that I've my lifetime work really over 2 decades of studying money and history. And giving people the ability to own their own money, spend their own money, and have a fixed supply based upon maths and code is one of the most important things that I think the world is ever going to experience, especially in today's geopolitics. However, when you have centralized companies that sit on top of that, you need regulations, and people get confused between good regulations and bad regulations. Personally, I believe bad regulations are ones that have an agenda that's against the consumer. For example, anti-money laundering, where you have to upload lots and lots of data and implement lots and lots of spyware in order to essentially give the data to governments so that they can collect taxes. I personally believe that that is anti-consumer protection regulations, and there needs to be regulations to protect from that. But there are good regulations, and the two shouldn't be confused. If you're operating a bank, then you want to know that that bank is stress test. You want to know that there's auditability requirements. You want to know that there's, if someone's operating a securities business like Bank to the Future, you want to qualify those investors. You want to make sure that they're suitable to invest in the product. You want to have transparency. You want to have disclosures. And you want to have things that generally protect investors from investing in something that they did not know what they were investing in. And regulations do provide that check and control and accountability and auditability in an environment where we don't necessarily have decentralized way of doing that. So we are, as an industry, involved in that conversation between trust and trustless. And that is the DeFi versus CeFi conversation, which brings us very nicely into what we're discussing today. But what people do is they mix these different ideologies together. And sometimes your best thinking in one context is your worst thinking in another context. And so when people say that they are decentralized, or you say something like invest in DeFi, and you're doing it through a centralized platform, this is where it really brings us into the Celsius conversation by misleading and using those ideologies, which I've seen time and time again, in order to make people think that what they're investing in is something. It turns out to be something different to what they did. Very long question. I'm really bad, so interrupt me when I go too long.
That's good. So
that sets the frame.
Well, the way this will roll is every time you answer a question, it'll bring up more questions. So considering you have your tentacles in every single crypto pot there is, you must have smelt something off. So my question is, in a recent interview you disclosed, I think it was with Scott Melker yesterday, how much you actually have on the network. And with all the fire and smoke that you could smell, with all the connections you have in the industry, why did you not pull your assets off?
Okay, so I'll answer that question, and then we might need to rewind a bit of the timeline to help everyone understand that. But as somebody that is a director of a regulated company, I sign up to a duty of care that if I do something that is not in fit and proper by our regulator, then I have a lot to lose. Because if I lose my position as a director of a regulated company, then that has a real big impact on the company. And as part of fit and proper tests, being involved, the reason that we at Bank to the Future are the longest standing company in Bitcoin, we started in 2010, and we're the world's first regulated securities business in the crypto industry. And the reason that we've survived all of those ups and downs is because I essentially applied, and the board applied, a level of ethics and integrity that would be applied in a regulated market. And so when I got a whiff, and I'll explain how we got a whiff, that there was something up at Celsius. Firstly, I hadn't put the two and two together. We'll go through the timeline. And by the time I had, it was too late. But I cannot, and this is where lots of people were asking me to buy and sell tokens and all sorts of crazy things and short markets. And I cannot move my finances in a position without disclosing certain things to others. And so, therefore, as a shareholder in Celsius, as Bank to the Future is a shareholder in Celsius, if we're requesting information and we don't receive that information, then if I moved my financial position before telling others about why I'm moving my financial position, which is why I'm so big on disclosure, if this all unfolds and unravels, then that will come out in a discovery process, and that is not good. You have to disclose conflicts of interest like that. So, if so I have to leave my funds on Celsius while we were trying to unwind exactly what is going on in this process.
No, great answer. So, and on June 1st, I asked Alex point blank question, which is now living in infamy on things like CoffeeZilla videos and stuff. I asked him, are our funds safe? And this was, I think, 12 days ahead of the ceasing of withdrawals from the platform. So that was clearly not true at the time. So getting back to the whole trust issue, it is pretty clear that trust is gone and Celsius needs a new face. Do you believe that is the case?
Yeah, and I've put together. I mean, would you like me to go into timeline and background
Please
how
do.
I
Yes.
gradually reached that conclusion? Okay.
Yep.
So I can't remember the exact timing, but at the beginning of 2020, I went to New York because I started to see this new industry emerging. And I had invested in, by the way, this is again example of mistruth. Alex came on and said he invented this market and created this product. We knew we were involved in Bitfinex when they created the peer-to-peer lending market for margin trading by Phil Potter. We were a shareholder in BSave that put together a user interface on top of Bitfinex that Celsius ended up acquiring. We've also been in touch with the actual inventor. I won't discuss them right now. They are right now that did create this, and the shareholders that were in that company that we're at this moment. And then, so we wanted to invest in the companies that were going there. So we went to the BlockFi office and we went to the Celsius office. And I thought it was a very good idea to have a way for Bitcoiners that didn't want to sell their Bitcoin to be able to take out some dollars. And those that wanted to short Bitcoin, like they were doing on the Bitfinex, peer-to-peer market and order book, to be able to receive some yield on that in an over-collateralized environment. Now, the difference with the way the Bitfinex did is it was all done in a transparent order book matched up peer-to-peer. So when you match up peer-to-peer, that is a different regulatory environment. And so that is what we originally thought we were investing in. We were going to, I wanted to invest in the BlockFi round. And the VCs actually ousted us out, even though Zach wanted to do it and allow his whole community to invest through Bank to the Future. We also looked at the Celsius round, and we ended up doing the Series A for that, under the model that I was told that they were operating off at the time. Now, over the last couple of years, moved that forward, and we slowly started to see a slight difference in what the model became. The first time we started asking some questions is when they announced that they were doing the Series B. They raised 400 million, and we have preemption rights, and they are legally required to offer our investors the right to reinvest. That didn't happen, so we asked questions. They then opened up a second tranche of the round.
What was the time frame with this Series B? Just so the audience knows.
Yeah,
this is November
I think
2021.
I think they can just look at the press release when the 400 million was released, announced. I don't have the time frame, haven't had the time to go through the due diligence, but people can look at when that was announced. And so we requested that our investors should be entitled to be able to invest. They then started to reopen the round, as it were, and correct that mistake. And we entered into this very lengthy process of requesting lots of documentations before we were comfortable opening the Series B. In the middle of that, Alex kept announcing that the funding round is happening in 2 weeks and promising it to the community. And then we were telling him, Alex, it's got to be done by this deadline because we have some regulatory changes and we need to implement that new user experience. And for some reason, he took it upon himself to throw us under the bus and say that we were having licensing issues. And the whole team reached out to me and said, "Oh, I'm very, very sorry about this." And I went on and tried to rectify the situation because it created carnage amongst our community. You can look back at these videos and the way that I tried to do that with integrity. So that was really the first thing. Then we started to see announcements that Celsius was investing in mining. Now we started to ask questions. The reason is because we know that a peer-to-peer lending model is very different to having multiple ways of generating yield through different investment products. And so if there are multiple products, then that's a security because you're investing in the collective effort of the management and their ability to invest those funds. If it is a security, then it's a completely different disclosure requirement. It's a completely different user experience, suitability requirements, everything that we have to do at Bank to the Future. And the reason why we're so much more quiet than a business like Celsius, who's marketing like crazy, is because there are restrictions on marketing when you are a securities business. And so we started to ask questions about that in the due diligence process. And that led to regulatory announcements. So then as one in our group, we have a US regulated broker dealer. And we were implementing our due diligence process and we needed full disclosure before we could launch a round on finances and regulatory enforcement actions. And that's when the information really started to slow down. And on one side, we saw the company just grow from 40 people to 800 people. The left hand wasn't talking to the right hand. Every time we were trying to get this done, we were getting people that couldn't sign off on stuff. And it felt like there was only one person that had the information. And it just didn't feel like a financial services company that was operating in a regulated environment with serious financial products.
So it's fair to say then you guys as an investor were boxed out from the whole picture.
So at this stage, we just kept requesting information and the information was not being provided. And then certain information would come through and we were saying, well, can you give us proof of this funding round? And the information flow, and we were saying, can we have transparency on the financials? We need to understand because we have to disclose what regulatory enforcement actions are happening. And this just became a process that just went on and on and on and on, while Alex at the same time kept saying, it's coming soon, it's coming soon, it's coming soon. And we would start to look really bad, but we kept our mouth shut when we were just playing in this process. Then that brings us to more recent times. As we requested that information, my father passed, and I announced that I'm taking a time out. And I took that time out in order to mourn that I had to cut short because I was getting direct messages from people that said, I feel like committing suicide. My life savings are in Celsius and I can't get them out and I haven't told my spouse. And these messages just started coming through and through and through and through and through. I was at a very emotional time in my life. And this really started to, upset me in a very big way. And so what I did is I told Alex that did you know that in 2016 and in 2013, we worked on the Mt. Gox situation. And this is what it looked like when you move into liquidity. It took 8 years. Here's the problems with it. And I said, in 2016, we implemented a free market solution for Bitfinex to recover. And here's how it worked. And he said to me, okay, go speak to my guys at Citibank. And at that stage, I was saying, Alex, you have to implement this in a timely fashion. You have to communicate You have to do this really fast. This only worked if you execute this and you put full transparency on the size of any hole. Now, obviously, there was no admission of a hole or anything like that, but there was a hunch that I had that there was a hole. And so I said, here's what you got to do. You got to get to that. And then other companies started blowing up. And we started having roadshows and meetings, and they effectively implemented plans. BlockFi found a way of not closing withdrawals. Voyager found a way of moving into Chapter 11 and disclosing the problem, and et cetera, et cetera. We got all these different, and then one of them said, 3 Hour Capital said, we're in too much of a hole, this shit's just got to go. So we got to see everything, and we were just constantly saying, at this stage, I thought that traditional finance was being conservative.
And digging into
and so
that,
I thought,
digging into that timeline, there was also rumors floating around that Alex offered you a board seat. Did this happen before you were told to go talk to Citibank? And did you talk to Citibank? Or did you skip that step altogether because you don't want TradFi involved?
So that particular meeting, I can't talk about the content, but I can say we did speak to Citibank.
Okay.
I can't say what was said or what happened. But I believed coming from that meeting that traditional finance were not going to do the correct solution that I believe they could do, that only somebody that comes from the industry would do that. The reason that I know that is because some of our other portfolio companies were dicked around by Citibank for over a year because the same team had engaged them to work on an M&A transaction. They spent a year on due diligence. They got signed off. They were ready to pull the trigger. And then when they went up to the executives said, hey, this is too risky. We don't want to mess around with that. So I knew that was going to happen. And I knew that Bitfinex's strategy only worked because of transparency and effective and timely communications. Otherwise, you're going to end up in the Mt. Gox situation. All the fear's going to go out. Your brand's going to be destroyed. Everyone's going to get scared, and everything that did happen. And it gets worse and worse. Then the lawsuits come through. And that time frame between that is when that all happens. And I was trying to explain that. Then the final thing, and this is so the timeline on that. So yes, we spoke to Citigroup. Then I was asked if I would like to join the board. If I'm pulled up in court on this, then fine. I will. I've got that. And this started to give me a suspicion of the integrity of Alex at this stage. He knows full well that most people that are going through things that might be deemed as fraudulent or insolvent or had all these regulatory issues, that if I joined that board, that would compromise the shareholder value of everything I've worked for at Bank to the Future. And it would put me in a position where I would have to be shut up because I'd have to sign all sorts of restrictive non-disclosure agreements. And I started to suspect that there was something else here. So I decided to take it to Twitter. And at that stage, I started publicly communicating to try and rally the community to let them know there is something you guys have to do here to put together a pressure in order to understand. Then there's a few more things within this timeline. More recently, I started to understand how they were structuring their recovery plan. And the way that it was being structured, to me, implied that there was something very big to hide. The reason for that is because certain members of the team and advisors wanted to move this into Chapter 11. And they were being told there was pressure from one person, that is the CEO, and kept changing those advisors to avoid it.
Okay, so just so the audience understands, there was pressure to go down the Chapter 11 route, but the CEO did not want that, in clear text. Okay.
And so I thought, okay, great. Alex is fighting for the company. And all this on-chain transactions happened and debt were repaid. And I believe that side negotiations were being done in order to put up collateral, and all sorts of things were probably happening. But at a certain stage, I started to think that this is actually trying to hide something. And at that stage, we started to engage a team of professionals that had vast experience in this. And I started to speculate. And again, these are opinions, these things, on why that strategy would be followed. And I started to believe that I was trying to be entrapped into something that was very fraudulent. I was trying to be silenced with that move. I was given a position that would have really compromised my integrity that I spent over a decade building a reputation in, and the shareholder value of the companies. I started speaking to the due diligence team that were working on the Series B and finding out where the lack of transparency was, and started looking at the structure of other people that were considering doing that they were trying to rally to do certain deals. And the structure was about hiding things and selling off the key assets. And that implies to me that
this is the concern, because I've been trying to track all the movements, all the wallet activity, and we'll talk more about some of the numbers in a minute. But sell off assets to funnel them elsewhere, or preserve them for the Celsians?
okay, in its simplest form, and this is my opinion, in its simplest form, you have a main business, and all of the other companies figured out a recovery strategy for that main business. If there is something in that main business that you need to hide because unearthing it would have serious legal consequences in terms of more serious things like running an unlicensed securities business, or being a fractional reserve bank without a license, or fraudulent transactions. And these are all, I'm not saying any of these things happen. These are just opinions where I'm trying to piece things together. Then the way you would structure that is you try and protect the main business from having to disclose its finances, and you would segregate certain businesses. And there was two businesses that were segregated. The custody business, which, by the way, I believed from my regulatory understanding, not legal advice, not financial advice, that in transitioning, when you have US regulatory issues and you try to say this is custody, and by the way, custody requires a license. So just saying this is custody because you have issues with the fact that you were selling a security, and segregating that off, and the only people that were in that were US retail, that asset that was being sold off is the one that comes with all the regulatory issues. And so that was, I thought, being, but a sophisticated investor can make their decision about whether they want to acquire that.
And just to double click into that for a second, the custody part, does that mean there is true segregation between the custodial assets that are held by Celsius on behalf of the custodians, and they are safer than the other assets, or do we not know?
I don't know that. I'm just operating off, I'm again, I can only say my opinion. There's certain things I can say, there's certain things I can't say. The custody business was being sold off as a separate asset, and the mining business was being auctioned off as a separate asset. We decided not to bid for those assets because I didn't want to sign the non-disclosure agreements that would silence me. And the main business, where the transparency is needed in order to execute an effective recovery plan, there was no way of getting that information. Okay. And that's when I started to get more and more suspicions, and recognized, and again, I forwarded too much, so much has happened, it felt like a year the last month. We published a page on the different recovery plans. And the first one was just remain silent and give it to them. If that wasn't implemented, there is a reason why that's not implemented. The second one was to do it as an external provider, and for us to get a syndicate of investors that could plug the gap, much like the BlockFi deal. We did that. I got up to $6 billion of commitments from people, but we couldn't give them any financials because that wasn't transparent. So no investor is going to plug a multi-billion-dollar gap, if there is one, whatever it may be, without the transparency, just like all of the other companies that were transparently sharing their position in Chapter 11.
Yeah, so it leads us into the whole question, i.e., how big was the hole? There was the Sam Bankman leak. I don't know if it's true or not. He said there was a $2 billion hole in Celsius. When I step back and try figure out, the numbers behind this, you have like Three Arrows Capital owed about 15,000 Bitcoin and a whole bunch of USDC. Celsius just paid back about 19,000 wrapped Bitcoin to get 444 million, and then they pushed over to FTX, maybe to convert into Bitcoin. You touched on kind of the three pies: the mining pie, the custodial pie, and maybe the other pie of the Celsian assets, and they tried to break all that up. Do you have any insight as to how big that hole is, or is that Sam Bankman free $2 billion true or not? And if you look at where the balance of account was, it was 1.7 million customers on May 1st, about $11 billion. Take a 50% haircut, considering how much the market has gone down since then. That's $5.5 billion. Take $2.5 billion off of that, you got $3.5 billion left. Is that kind of ballpark where we are with the assets and the wallets, or is the damage worse than that?
Yeah, I don't want to speculate on that. I have my opinions, but I really don't want to say something that here's the challenge with this one. There are very different interests. Again, I haven't even disclosed my interests. I did want to say I am a depositor, I am a shareholder, and I have never bought any sell tokens, but I found some sell tokens in my account that I have never purchased. And if that needed to be when this all unwinds in discovery, my account will be information, so this can be verified to find out those activities. And so I've acted that way, and that's how I've always acted and operated. When I started giving information on this, selling, I've tried to disclose absolutely everything I possibly can at all times. And so I have opinions about what the hole is and what we were preparing for, because we knew that time was of the essence. And we took the opinion that this isn't going to be tens of millions, this isn't going to be hundreds of millions, this may start with a B. And so we started preparing around that in order to put together an active plan. Now, we will find out, but what I started to realize is that I was working on trying to support a recovery plan for Celsius because it has an amazing community. And then all these vested interests started coming up. People were just talking about shorting tokens and buying tokens. And there were all these different people that were trying to protect their deposits. And then there were shareholders. And then there were people that owned the token that had all these different. And I realized the complexity of information. So I wanted to set a new standard. So I started going on YouTube and explaining to people disclosure requirements, transparency requirements, the difference between P2P, the difference between a securities business, the difference between a banking business. And I soon started to realize that in any recovery plan, the way it worked with Bitfinex is you need to have a valuable company at the end of this. And I knew that there was regulatory issues that needed to be solved immediately in order for the company to have a future. And by the way that the CEO was acting, I started to realize that there was multiple board members, there were multiple advisors, and then there was the CEO, and they were acting in different interests at some stage, and this became my speculation. And that's the final stage when I started to get more and more information, and people started sending me these links to AMAs and how this product was represented. I started to realize there is billions of dollars of life savings that has been taken out of a bank with their belief that they had invested in a low risk saving account that was able to pay them a higher interest instead of a high risk security, which should only have been sold and disclosed in a certain way. And a bit more information there. We were building a version of how to do security law compliance for this, and we were beta testing that. And we were working with Celsius to show them this is how it's got to be done in security law compliance. And that kind of brings us to where we are today, where people keep sending me links because I don't have time to follow week after week of AMAs. But how this was being represented made me sick. It literally made me puke. When I first came out on Twitter, I knew that Citibank was the advisor, and I knew the types of circles that they might be going in. And I thought Goldman Sachs was going to be one that they were syndicating $2 billion. Speculation, I believe that was implanted from the inside in order to get other investors to want to compete with Goldman Sachs. Because when I spoke to my contacts at Goldman Sachs, they didn't know anything about it.
Yeah.
And so people started to think this is FUD. And this is when I really started to see there is a massive difference in the sophistication of this community, because so many people have been duped into believing this. And I started to realize this is something a lot more serious. And as I started to get more and more messages, I did start to actually realize that this has become an individual versus a company. So then I changed approach and said, the only way to get transparency on the financials is to put it into Chapter 11, because under the current leadership, there are a bunch of people that are being manipulated, just like influential YouTubers that were manipulated, and other people. Again, this is all my opinion, and if I'm wrong, I'm happy. If I'm wrong, I'm happy. I tell you why: because I would much rather the original thing that I invested into still exist, because I'd like my deposit, I'd like the service to exist, and I'd like my shares to be as valuable as they were before all of this came out. So I have zero interest in that. But then I started to realize this needs a new board, this needs a new management, this needs a new Chapter 11 in order to get transparency on the financials. And we are dealing with something a lot more serious. And I believe that everything that I've seen turned out that it's actually the CEO versus the depositors. And that's when we decided, okay, I'm going on your show. And I started to tweet some of the opinions, and I did an AMA where I got a bunch of lawyers, because I started to realize there's a lot of people that can't afford legal advice. They don't understand what they may need to do before Chapter 11, what they may need to do after Chapter 11. And so I started to get a bunch of lawyers that would volunteer some information on an AMA in a Twitter space in order to try and get the people that can't afford lawyers to understand some of the things that they may need to consider doing before and after. And that Twitter space is still on there. This has been moving at 1,000 miles per hour. And I wanted to do that so that, and if anyone should go back to that Twitter space to see if there's any useful education. They're not your lawyers, but I just believe that there is going to be a plethora of lawsuits. And therefore, I started to realize that there is no recovery from the company, in my opinion. And therefore, it needs, if there is a future, in order to do a plan that makes investors whole, we need to find out what the whole is. It needs to go into Chapter 11, from my opinion, so that the whole can be transparent. And then there needs to be a future for the company, which requires a new board, new regulations. And I started to put together all of that as a way, and full disclosure. If that happens, I will benefit financially to make up for the losses. I will align my interest with depositors. And I also went out to a bunch of people that could write bigger checks and put together competing offerings, so that there are multiple parties. And if their offer is better than ours, no problem. So, but I started to realize that that's where we are.
And that was a key point to everybody in the audience as well. Simon's interests are very much aligned with yours. He truly has a lot of skin in the game. Let's get back to ever since they hit the pause button on withdrawals. Do you think there have been any shenanigans played in that meantime, moving money around? You know, it's not hard to wash coins, hide them, pivot them. Do you think the existing leadership team, whatever's left, do you think they have, the leadership is committed to making customers whole, or as whole as possible?
I believe that the CEO believes that he can plug the hole somehow and cover up a bunch of stuff, because Chapter 11 will reveal a bunch of stuff that may impact the future of him. And I think that there is those different interests that are competing. And I believe that other members of the board that are newly appointed are in the exact type of actions that I've seen in Alex's interactions with other members of my team, employees at the company, people like yourself. And I believe that that is what's happening right here. And as I started to see that people, in order to protect the value of a token, were starting to build a cult religion around this leader, I had to just reveal the information that I had in order for people to make their own decisions about what this is. And so there are competing interests. My belief from here, I don't think anyone's ever going to hear from Alex Mashinsky ever again. I believe that there will be a carefully drafted statement from a bunch of lawyers that will be signed by Alex Mashinsky. And I believe that it needs to move over to Chapter 11 in order to get transparency. And once it moves into transparency, then people can start to figure out what is the best way of making depositors whole. And I believe that that can only be done under a new brand, a new board, new regulatory environment. And so we started to put all of that together so that there was a way of making depositors whole.
So there's rumors as well that CZ and Justin Sun and Sam, etc., they all want to bail out these companies to help the industry as a whole. It doesn't serve anybody for this whole CeFi implosion to happen. It just destroys the reputation of all things crypto. And one of the things I must say, the Voyager team, probably because they're publicly traded, etc., they've been very open and transparent, which I thought was very comforting, whereas Celsius is completely secretive, which makes people nervous. If you had to take a guess from the information that you have right now, what would you say is the hole, or how bad is it? And how much was withdrawn before they hit the pause button? And is there anything left?
That's a big question and a moving target. And the reason that is because we don't know what's happening behind the scenes.
Yeah.
And though you can see things on blockchain, remember there's another side to a blockchain, which is legal agreements that are being signed by certain parties in order to borrow money and do all sorts of stuff. And this is the point at which I knew this is where shenanigans can happen. This is where I believe that the best approach from here is Chapter 11 to reveal exactly what is, and we're beyond the point of the previous strategies that I recommended to both the bank and the board.
Yeah, and I felt, as we were scheduling this, we kind of felt that your 3 trains had left the station. The only option now left is Chapter 11. How quickly do you think that can be implemented? Or how can the community here accelerate that? Or how can our voices be heard right now? What would you say is the plan of action?
Okay, so let me give you some experience. So in Mt. Gox, which took 8 years, in terms of Bitfinex, it took 2 weeks to reopen withdrawals and 9 months to plug the hole. Tether also had another one that we were involved with, which was an $850 million hole as a result of a fraudulent shadow bank that the government seized the money that was backing Tether. They implemented that within 2 weeks to plug the gap. And all of those strategies worked incredibly well and made investors an incredible amount of money. Like really one of the most profitable investments of there. I'm not saying that can happen because there's speculation here. We're in an industry where whatever happens with Celsius, if the liquidators decide to sell those crypto assets, that can create cascading liquidations and more exposure to other companies that have been trying to lower their liquidation values.
Yeah.
This is a Lehman Brothers moment, and how Celsius act next affects the industry. I'm not being a doomsday. I've been through cycles. In Mt. Gox, there was all sorts of things happening in that. And the industry had to lobby to make sure that they didn't sell the Bitcoin. Kraken, which was a company that I was a shareholder in, they had to step in and support unwinding all of the mess of who owes what with the trustee and the liquidators. But the community had to lobby not to sell those Bitcoin. It was about to go bankrupt because Bitcoin crashed so much. And by the end of it, Bitcoin became worth like $7 billion or something, and had all the hard forks of Bitcoin Cash and all the stuff along the way. But it took 8 years, and it forced hodled them for 8 years. So that is one of those solutions that can happen if it gets messy. Chapter 11 is really designed around an effective party. Now, here's the difference. That is when the company has no future. Bitfinex put together an effective strategy where the company turned out to have a future, and the speculation of the equity is what drove the returns that plugged the hole. The only way I can see this going is you either do Mt. Gox 8 years, and every time someone has a lawsuit, it prevents creditors and depositors getting their funds, and someone else comes with another lawsuit, and then they can't do that, and they may take the opinion that you've got to sell the crypto, and they may think that this is the end of the crypto market, so you've got to protect the dollar value, and all sorts of things that could happen, or they find an effective company that can actually has the licenses and a regulatory future and an equity model that can work, that can put together an innovative solution where the company has a future. And I was trying to educate people at this stage, it's got to be compliant. This is a securities business, or it's a bank. And if there is fraud here and fraudulent activity, there's no chance that the regulators are going to sign off on those board members. I know what it's like to be signed off by a regulator as a board member. You have to complete these ginormous forms, and you have to make sure that you don't tick yes to anything. And those questions are things like, have you been bankrupt? Have you done this? Have you been investigated? Have you been disqualified from another thing? Have you ever done illegal security? And every time you click yes, you have to provide mountains and mountains of documents and prove that you are fit and proper in order to run that company. I do not believe that that can happen. And the only reason that we got here is because there was an assumption that we had a peer-to-peer lending model that then turned into a securities business, without any consideration of the compliance change, that as it got hacks and things started to happen, and there was massive exposure that no one knew about, it turned into an unlicensed fractional reserve bank. And at the same time, the promoter was promoting this as some kind of compliant, regulated thing just because they signed a Form D, which is a disclosure to the SEC that you're selling a security for a token. And people were confusing all of these incredibly complex subjects that I spent the last 10 years and paid tens of millions to all sorts of lawyers in order to understand these different things that are very confusing to a bunch of people that were nowhere near the level of sophistication to understand the level of risks that they were taking with their funds. And then I started to see that the representations, how new customers were acquired in order to put funds in this, and it made me want to puke.
What are the odds, getting back to some odds, of somebody stepping in there and steering whatever exists, whatever's left, away from doing things like selling the existing assets for fiat at this bottom of a market and finding a buyer? Because I know Nexo offered them a letter of intent, etc., but that was just ignored. You're so right that the things need to happen fast. The longer it drags on, the more creatures come out from under the rocks, and it just messes up everything. If you were a betting man, what would you say that a resolution will be found, or will this be tied up in legal court cases for the next number of years?
We've invested in the best team that money could buy, and pulled together 11 years of contacts and put together the capital to write, if the transparency is given under Chapter 11, up to $6 billion in debt and equity, if that is needed, and a suitable structure that we can plausibly give to investors on a recovery plan can be put in place. I've also reached out to as many other players from all the relationships that I've built that could also do that and compete with that, so that depositors can get the best result. I still believe that there is a plan. And here's one thing, and this is the commitment that I will make. Until the final hour, We will do what we can, firstly, for my deposit and to retain some of my shareholder value and the shares of other Bank to the Future investors, if we can. I cannot promise that. We've done it before, and we've done it to great success before. I will push for that, and I will push others to try and put together a suitable solution. And therefore, Chapter 11 is designed to try and get the business out of that situation as fast as possible. I'm not a lawyer. I can't give you legal advice. I can't give you financial advice. But we need to understand what the situation is. We need to understand the whole. And then we need to understand how that compensation can be done. And normally it's done with a combination of equity, which means there has to be a future for the business, which means regulations, it means trust, and it means putting together a compelling business model with someone with a suitable balance sheet that can win back the trust of as many depositors as possible. And smart crypto financial engineering. I personally know that there's no one in the industry that's had more experience at doing that than us. But I also know that there is some incredibly other smart people that could put together competing bids. And I'm confident that a solution can be found. And my commitment is to try with all my power to try and find that solution. And the ethos that I announced has not changed. I put this together the following framework as a mechanism for helping people understand as a shareholder and a depositor and somebody that doesn't own tokens but found a few of them in my account because I must have pressed the wrong button that I've never purchased that is immaterial compared to everything else. Yeah. And I said the following. I said, there is no value in the future for shares unless depositors feel satisfied. And if they feel satisfied, then there is a possibility of creating shareholder value. And we've seen the valuations that FTX are set in the market as a benchmark for what that would look like. And the deals that have been going, and I was involved in many of those deals. And if and only if that can happen, there may be a future for the token under two models. I personally believe, not legal advice, that currently the way SEL is structured is an illegal security. And Alex Majinsky put an offering declaring to the SEC that it is a security. And I believe that there were certain misrepresentations where people thought that this was trading compliantly. If it is, it can't trade on a crypto exchange unless they got a securities license. There are ways of making that compliant that we've been working on for years. And if it needs to be a DAO, we've also worked with companies like Shapeshift. I'm a shareholder in Shapeshift. It transitioned a company into a DAO. And we've got direct experience of all these different monies. We know these different structures. We know the pitfalls. James, I'm sorry I'm going on so much, but there's a lot to get out of here. There's a lot to unpack.
Yeah, and I was going to talk about three topics of financial engineering. One of them is the DAO route for Celsius to take over what remains. So I'm glad you pressed upon that because I was going to talk about that. Also, you've written the playbook. You've seen the playbooks as to how people can come out of these types of situations many times over the last 12 years. And in addition, if you look at the Voyager plan, that is similar in kind to some of the things you proposed. Why does if the Celsius board or whatever, if they're in any way decent, why don't they just follow that blueprint? Or it could be another simple issue like a surety bond to bring back that trust and put it in the hands of a team that will make everybody as whole as possible. Like there's so many different options out there. What's preventing them from moving forward? Is it because the CEO wants to try and do something else? Or, right now?
So with regards to Voyager, I'm under certain NDAs that would prevent me from discussing that, but that was very effectively managed. And it followed the playbook of different strategies that I also gave to Celsius. Yeah. I can't say any more about that. With regards to why that has not been done, and again, I put together a panel of lawyers to try and give their opinion without giving legal advice, which was on that space, and they gave different types of things for people to consider in order to pre and post Chapter 11 protect themselves. People might want to watch and listen through that. if they can't afford a lawyer, but they can't rely on it, they still need to get their own lawyers. But remember, under Mt. Gox, a lot of consolidated, pooling of legal did happen. So, there will be a future for this. There will be certain things that need to happen. I know that there's certain uncertainties. But this is when I said the only way to get the transparency on what has actually happened is if the person that has every vested interest in not disclosing certain information can no longer not be in that position. And that's when I said, actually, Chapter 11, I believe to be the only route forward from here.
Okay. What was your take on that 25,000 wrapped Bitcoin ported over to FTX? How should we interpret that? What's your take?
Again, I can give you my opinions, but there needs to be transparency to get to real answers. I'm not sure what off-chain contracts have been negotiated between parties. So that sits on top. People say, yeah, but it's all on chain. I know how these things work. There are backdoor conversations of legal agreements that are being signed that lead to on-chain things. And there are also some very bad actors in our industry that do not see the ethics of market manipulation as an ethical responsibility that causes harm to others. And that's what's wrong with our industry. People see things like short selling and all the behaviors that require regulations in order to try and prevent them happening in traditional markets, and they still happen because of the ethics of individuals. People in the crypto market just think this is okay. They don't see the connection between, telling someone publicly one thing and acting in a different way without disclosing their interests. These are ethical responsibilities that you either have not seen or not quite put together yet. And we've got to put some humanism in here. But there's massive market manipulation in our industry. I just don't fuck with that stuff. The returns in our industry from Bitcoin have been the highest performing asset class in history. And yet we're fucking around with short selling and market manipulation and trading and leverage and all these things because people are vastly underestimating the level of wealth that has been achieved over the last 10 years. And they're trying to get rich quick and buy a Lambo within 1 year. And there is a disgusting industry of people that are willing to perpetuate that motion and tell people things without disclosing their interests. And this is the type of shit that when people lose their money, they in the bull market will say, we don't need regulations.
Yep.
And then when their shit comes and backs and bites them, they go tell the regulators, why didn't you protect us? And guess what they do? Everything I've been fighting for the last 2 decades of getting legal changes to allow for financial inclusion gets unwind, and this only goes to the people that can afford to lose it. It's because of shit like this.
Yeah.
And it really makes me sick. It really makes me angry that these representations are made that fuck up all the work that is being done that progressed our industry, because Bitcoin is too important for people that are suffering financially at the world's largest regulated Ponzi scheme called fiat currency. This is too important, people. And that's what I want to try and get out to people. And I don't fuck around with those things. I'm sorry for swearing. The reason for that is because 1, I can't get away with that shit. And 2, I believe in karma. I believe in ethical responsibility. I believe what goes around comes around. And I believe that there is a sense of higher purpose and duty to do what's right. And I get things wrong. I've done things wrong. I've lost money. I've made every stupid mistake under the sun. But I've always had a guiding force of an ethical responsibility in an industry where you need that in financial services, because we have seen in 2007 and 1907 and 1933 and every single stock market and market crash and market pump and dump and central bankers that don't have the vested interest and politicians that are pushing us into central bank digital currencies that's going to be communism on a blockchain instead of free market solutions and not having the right interest. I know the consequences of that. The stakes are too high. And we got Bitcoin here, and this is an important moment, and you're giving everybody what they need and the ammunition that they need in order to fuck up our industry.
Yeah, I can tell
But Bitcoin is a honey badger. It will survive and it doesn't matter. And that's the thing. That's the important part of that. There is still trustless. There is still money you can own. There is still money you can spend. And there is still money that will have a fixed supply and a bunch of securities that sit around it. They're going to be regulated the shit out of over the years. That will probably lead to the next bull market after a big sideways. And then everyone will just forget the lessons and create the next pump and dump scheme again. Cycles happened. Expect it. But it's times like this where you are now an experienced investor. You've lived through this. Come back, fight another day, and do things in with that information, sound risk management, ethical responsibilities, and you are alive at the most interesting and exciting time in financial history. And we've got a lot of people that are suffering right now with geopolitics, hyperinflation, predatory loans from the IMF, Belt and Road initiatives, a change of empire, Ponzi schemes, all sorts of stuff. And we've got Bitcoin here that can support a lot of people, as we're seeing in other countries.
Yeah,
Sorry.
No. It's a very good rant, and it's a rant that people need to hear because it is important for the future. And the future looks dark from CBDCs, etc., and QE to infinity. You name it. It's not pretty out there, and that's what I'm trying to kind of preach. And it's just it is a true shame that this type of crap went down, and it gave the industry two black eyes. But as you say, we'll all hopefully live to fight again. What about when I look at the liquidation mechanics, it surprised me how many people had things like loans, collateral loans on things like Celsius, and they froze funds and liquidated loans. Do you think, and it might be a silver tinfoil hat thing here, that was a tactic to fund the business by basically grabbing in and grabbing people's coins by liquidating their loans?
Opinion. I don't know exactly what I've seen a million different mechanics like that and a million different stories from people that are DM me with all these unique situations. I think it all comes down to the ethical actions of the people that were taking these actions. And I made friends in the Celsius team. I saw a lot of people that bought into a vision, that bought into a dream of financial freedom, that bought into unbanking, that worked day and night, under the leadership of somebody that was driving them hard work, day and night, and a community that was doing everything that they could. And he put together an amazing community, and an amazing, bunch of people that were dedicated to a dream. And I believe that they have been let down and we need to come back and live and fight another day. The ethical responsibility of how do I judge those actions? Certain actions need to be taken. I don't want to kick someone when they're down. I've made mistakes in this industry. There are things that are obvious in hindsight. But does that person or do the people taking that action have the best interest as a culture of their people? And not because they say it, but because they live it. Yep. Here's another problem. Free always means that they're doing shit in the background. Fractional reserve banking gives you a free bank account. But there's a big problem in what's happening in the background. So if you're slagging off competition and slagging them off for charging fees because they may be running proper processes that requires them to pay professionals to do their jobs properly, which requires charging a fee, I think that narrative is unethical, irresponsible. It seemed like it galvanized a community of people into believing that this is something that it's not. And I leave that to karma, and I leave that to the law, and I leave that to regulators to decide what to do with that. I'm focused on solutions, and I think people should make their decisions about who they want to get behind, what they want to do. And that's why really I feel like we are here where we are now.
By the way, your passion level goes into high gear after 7 p.m. local time. So it's your third wind of the day. Let's a couple of other things, because we're on the receiving end of concerns that people have. And I want people to know that the Sol token, for all intents and purposes, is dead. It should be no part of the future, and people should not speculate on it. Would you agree with that statement?
Nobody I will not say anything about the sell token, because people will take what I say and they will make decisions about whether to buy, whether to short. And the thing that I said is, everyone was telling me, support the community, buy this token, short squeeze. And I was saying, I'm not touching it. I'm not doing anything. And I got absolutely slammed. And my reputation tried to drag through the trenches because I was trying to tell people, I can't fuck with that stuff. Now, is there a future for the sell token? Same philosophy that I said from day one. Depositors first. If depositors have a future, there needs to be a company that may make shareholders have something. And that requires regulations, and that requires compliance. And it also requires a great financial plan to fill the hole. Then and only then can you start looking at a token. And there are two different models. You could either imply a DAO, which we have experience of, or you need to make it a security and correct the mistakes and speak with the regulators and do this shit properly, just like we always do when we're about to launch something, just like we did when we needed to launch our retirement plan that was in compliance with securities laws, that would benefit from a certain percentage with sound risk management in a percentage of it into yield. And we go out there and we get permission, we explain what we're doing, and we get sign off for that process. I know that people like fast, but the skills that you need to make a startup work are very different to the skills you need to make a sound financial services company that has a culture of ethics and responsibility, that complies with regulations, and has taken us over a freaking decade. And I know other people that invented this industry. Celsius didn't invent it. And they've been spending 6 years while other companies come along and say, we invented this industry, because they're doing all the marketing, because they were able to say the things that the companies weren't able to say, because they were doing things properly and in the best interest of their depositors.
Okay. Got a couple of final questions, and then we'll try to wrap it up. What if, and this goes back to the whole Chapter 11 thing, what if Alex refuses to ever put Celsius into Chapter 11? Is he still driving the bus?
Alex is still, in my belief, currently driving the bus. I believe he's the largest shareholder, and I believe he has a big influence over professionals. And when other professionals have come in, those professionals have left because they don't like what they see. And when other people have invested, they have left the board because they don't like what they see. And therefore, the faster that this can move into Chapter 11, the better. From my perspective, not legal advice, not financial advice, that will have impact on certain financial decisions. And I do not believe that there is a fit and proper director that's going to pass the scrutiny of regulators that can build a future for that company, as I've already said. I will divert to my lawyers. I've got the best lawyers money that can buy, that has the most amount of experience in deals like this, from Mt. Gox to Bitfinex to Tether to everything in between, that has gone through countless Lehman Brothers situations. And they know how to navigate, and I trust my team in order to do and get this in the direction. And they are very smart strategists. And they know the ethos of what I'm saying to you, and that is their mandate in trying to make this happen.
Okay. Now, what can people do? What is the plan of action for Celsians right now if they have money trapped on Celsius? Should they take screenshots of balances, store all emails on record to support, etc., contract other parties? What would you advise those out there that have funds trapped like you and I?
Okay, not financial advice, not legal advice. I took the ethical responsibility to ensure that my deposit stayed there so that we're in the same boat, because that would be the end of my career if I did certain types of actions like that in the unwinding process. Now, there are several things. Firstly, I've already said on my Twitter, I don't know where it is, we'll figure out where the link is. I started to put together industry lawyers that have been involved in even the legal cases, like Jason Seibert, that put together the legal case that the first court that declassified Bitcoin as money when there was a Ponzi scheme that was trying to use a defense that this isn't money and therefore I haven't ripped off investors. He was saying the types of actions that need to happen from experience in many, many different crypto cases. And he was given certain advice. Listen to it. The reason that I did that is because I know there's many people that can't afford lawyers and will not know who the ones are that have the right level of experience. So listen to it. And it's not your lawyer, but he was given tips. Follow those tips, and either start to speak to your counsel, or there will be coordinated, just like in Mt. Gox, where everyone got together and they put together legal actions as a pool that led to a great result 8 years later for those that were involved in Mt. Gox. If you want to put an opinion around a recovery plan, then bnktothefuture.com/Celsius. The link will be somewhere on this. Tell us what you got. We figured out some tweaks to the model that we would have worked in 2016 but wouldn't work today based upon the community giving feedback. We've got a team of people that are going through all those answers. You've got to disclose your interest, whether you're a shareholder, a token holder, an employee, someone that works at the company. And also remember, this is not advice, but here's what I can tell you about a company like ours. If you are a regulated company, you are required to have a whistleblowing policy, and there should have been one. So that gives certain protections to people that want to talk about certain things that they think would be relevant to whatever comes next. So that's all I can say. There's a bunch of things. There's a bunch of advice there. There are people. You have to determine whether I'm some predatory vampire that's trying to suck up Celsius and short squeeze and all sorts of stuff. You have to make that decision, unfortunately. Or you have to decide who's got your interest and who you're going to follow. Make that decision, follow the correct process accordingly. And there's 3 different types of actions that I've tried to take. And if you want to know why I'm doing it, financial interest. I have a multi-million dollar, tens of millions of dollar deposit there that I didn't move because I knew I needed to be in the same boat in order to maintain my integrity. I have a shareholding that I'd like to be as valuable as it was before all this stuff was unearthed. And I have a belief that, ironically, the phrase that Alex said on AMA after AMA, do good, then do better. I actually freaking believe that. And I don't know whether he started off believing that and then got himself in a situation where he no longer lived that. But the actions that I have seen is not that. It may have started that, and I bought into that, and I feel duped. Yeah. I'm angry.
And do you believe? It's funny,
definitely not that at the end, and that is a philosophy I actually live by.
Yeah, because people like yourself, myself, Plan C, we were smooth talked into buying into the whole vision and believe it. But do you think maybe there's a small chance?
Can I just say one more thing about a disclosure? Sorry, and then we'll take your question. If I lose all of my money and all of my shares, it is a small fraction of my wealth. I'll move on. If I lose it, it's not going to make any difference in my overall net worth. But the people that have 100% on, or 50% on, or 75% on, that is going to make a major difference, and it's going to set them back financially in a way where they are completely even feeling embarrassed and ashamed. It is not embarrassing and it is not ashamed to be duped. I understand the philosophy of not your keys, not your coins. I'll live by that. I educated people on that. Andreas Antonopoulos created it, and I also believe in risk management. I believe you need to protect yourself from losing your keys at the same time as having some that is, the vast majority where you control your own wealth. And I believe in diversifying for a future of central bank digital currencies and a future of a gold standard and a future of a Bitcoin standard, because each and every month I want to be in a position where whatever happens, my finances are okay. Because when my father lost all his money in the stock market, just like James said that his father lost all of his money, that drove me to never be in that situation again. And here's the thing, I got myself deep in debt trying to create a bank. I got myself in dire debt. I understand financial anxiety. There is always a way to recover if you listen, if you learn, and if you do things differently. And that is the only thing you can do that. And we will do all we can within our power and our team to put together a solution against the most of a really messed up situation. And it does not really make difference to my overall finances, but I do want that money back and I'll fight for it. And I do want some shareholder value and I'll fight for it. And I do want all of those people that have direct messages me with heartbreaking personal stories because they were duped into something that they didn't know what they were doing based upon a promise of protection that is extremely misleading and extremely serious. I want them to be in the same position that I'm in one day, where they recover, that James is in, because he learned the lessons and he has been given education to people to try and provide an ethical, responsible solution. And we get things wrong. I get it. He's out giving content, not giving content with an agenda of duping people into losing all of their money by excessive risk taking when they thought they invested in a low risk savings account and they invested in a high risk security that wasn't disclosed and no one understood that. Then people like James need to go out there and continue giving content that helps people understand how to protect yourself in the shitstorms ahead, because it is good times ahead. Bitcoin does exist. And the information that James outstandingly gives, the tiresome work that he gives, putting together slide after slide in this environment that we find ourselves in, where for free, you can get the equivalent of what used to have to be connected at the top of an investment bank in order to experience. That's the beauty of the world that we live in today. And the fact that we can even come in here when Bloomberg and other channels are trying to just get scoops, we get to actually create our own media. Times are freaking good. If the education is given to you, you adjust and you do things differently as a result of this most valuable experiential learning experience. And it is never worth taking your life because you find yourself in a position where you can't disclose that you made a mistake because someone duped you into making that mistake. When my father passed, we were sat on his deathbed and we were connected with money. I spent my life 2 decades trying to figure out what happened to that money. And James has a very similar story.
Actually, my father was an accountant. He was the most conservative man you'd ever meet, and he only ever held cash. He never made investments. So
okay, so his, your father was inflated away by the Ponzi scheme, just like my father that thought the only way to protect yourself is to hold cash, and he saw his savings go to bloody zero at a bank, and that information was used in order to dupe people to invest all of their savings into a high risk savings, a high risk fund. That information is sacred. But when I was sat on my father's deathbed and we were connected by the subject of money, we were just talking about love, and that's all that matters. Do not take your life because someone duped you. Love is all that matters. Yeah. Financial freedom buys you the things that allow you to experience life, but it's never worth it. You can recover, you can learn, and at the end of the day, when that time comes, the money's not important.
Exactly. The old expression is there's no pockets in the shroud. If anybody knows what that means, you might know what that means when you're part of the world. But Simon, we really appreciate you being here. And the life guidance and advice for people out there. I always said, I have videos back in January 2021 when I started this. I said, I don't get out of bed for 6% yield because I was very much anti-yield. And I always stressed, never, ever, 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 ever have more than 10% in any one basket. Boom. There was a key rule. But unfortunately, that's the big learning from this, things like, if it sounds too good to be true, odds are it probably is. And the world is a dangerous place. The games that are now played in the crypto world have been played for millennia, going back in time. Nothing is new, just a different flavor. That's it. So with that, I want to thank you again, Simon, for spending your Saturday evening with me. I hope you still have time to go get a nice dinner somewhere out there. By the way, I see seagulls behind you in the window, and I assume it's not a green screen. I think they're real birds. True or not true? Somebody asked.
This is, I'm privileged in life because of what happened to my father. I've been investing in Bitcoin since 2011 and dollar cost averaging. I'm fortunate that I invested in Coinbase, Kraken, Bitstamp, Bitfinex, companies that became multi-billion-dollar unicorns. I've been blessed. I respect this industry. I respect this industry for what it actually is, and the fact that I get to, live over a beautiful scenery it is something that I am truly grateful for. But it's come from hard work, and it's come from learning, and it's come from a tireless, relentless study and seeking for information. And if I could do one shameless plug at the end of this, before all of this, I was writing my new book. I wrote the first published book in the world to include Bitcoin. And I've been following the money for over 5,000 years into the entrenched interests of the system that brings us exactly into central bank digital currencies, IMF funding, all sorts of war funding, and all of the atrocities that are being presented in changing empires right now. And my commitment is to get that book out by the end of the year. And you don't make money out of a book, by the way. The publisher makes 90%, and the other 10% I'll give to a cause that supports people that don't have access to these books. But I'm going to create that book will give you everything and the best of everything that I know about how to build and protect your wealth in what I call the Great Depression of the 2020s and decades ahead. And that's something that I believe that after all of this, implement what you learn. It will tell you the entire history, including all the history in Bitcoin and things that nobody knows, because I was behind the scenes in many of the things that happened as a shareholder in many things in this industry. And my commitment is to get that book out there so that everybody has the tools that they need and keep listening to some of the amazing content that James is putting together. He's pouring his heart out here, researching things. Use it, learn from it. Do your own research. You can't hold him responsible for things that happen to him. If the end result of this is that we blame the people doing the good work for the actions of somebody that didn't do the good work because they were duped into doing something that they thought was right, and they come from the pace of their intentions were good, but mistakes were made, then that's a crying shame. Yeah. And that shouldn't happen. Understand who's doing the right stuff, who's doing the wrong stuff, make a decision and do what's right for you. Do your own research, get better education, and don't let this hold you back. Thank you very much, James.
Appreciate you, Simon. And I know the audience does too. You take care, my friend, and we'll see you soon. Take care, everybody. We'll get through this. Bye-bye. This too shall pass. Famous words.